The stock market is crashing, and investors are worried about how much money is being spent on AI, how much money is going to be needed in order to make AI a reality. So, is it time to sell out of our stocks, to hold our positions, or is it time to invest more into these companies that are changing the world with AI? That is the big question. Should we be investing more, or should we be staying on the sidelines, or even selling out of our stocks? Let's start with all of the news that is driving this market down. So we have to understand what is creating this fervor to sell off these high conviction names like Nvidia, like Amazon, like Google. It all comes down to AI. So there's been a ton of news about different funds or different companies divesting from Nvidia. Nvidia is really one of the keys to AI. It is laser focused on the future of AI. And there have been several companies that have decided to sell off all of their stake in Nvidia. Most notably is SoftBank and Peter Thiel. Both SoftBank and Peter Thiel, they run investment funds and they have sold out of their entire position of Nvidia, which is kind of interesting because you would think they would just sell off a portion of their investment that they have in Nvidia, but no, they decided to sell their entire stake in Nvidia. And really what that is doing is signaling to the entire stock market that maybe Nvidia is not what it is cracked up to be, that maybe Nvidia cannot maintain this level of growth. There's no doubt that Nvidia has been one of the greatest growth stories in the entire stock market. And these individuals, these businesses, are taking their profits from Nvidia, from the gains that they have received from the run up in the stock price of Nvidia. But the question becomes, can Nvidia grow from here? Is there room to continue this massive growth trend that they have been on for the next 1 year, 2 year, 3 years from now? That is a big question mark. And it looks like that is going to be the case, that these companies, all of these companies, Meta, Google, Microsoft, Amazon, that they're going to continue investing, continue to be buying products from Nvidia. And Nvidia has even been aggressive with how they are financing some of these less well-funded businesses like OpenAI or CoreWeave, some of these lesser known AI companies that are going to be part of the AI infrastructure when it really takes hold in the world. Now, I think that NVIDIA can still continue to grow. It's less cyclical than it has been in the past. In the past, the chip industry, the semiconductor industry, has been very cyclical, that there have been big swings in demand for their products. Sometimes they're growing really fast, sometimes they slow down and grow really slowly. But now it's looking like the demand is really going to stay for these chip companies, at least for the next few years. And maybe after 3 years, demand might be off. But for now, I think that uh, AI is going to continue to grow. So a lot of these companies that are selling these big name stocks are trying to get enough cash in order to fund their own ideas, to fund their own initiatives. SoftBank has committed to spending a lot of money on the entire AI ecosystem and to putting manufacturing in the United States, investing into the United States. They're going to need money. They're going to have to figure out where all of the money is going to come from in order to fund these initiatives. And I think that's also really spooking a lot of the individual investors, a lot of the institutional investors, just how much money all of these companies are spending on AI. They don't have the money at the moment. There are a few companies like Microsoft or Google that, yes, they have a lot of cash on the balance sheet, but they're not going to want to spend all of the cash on their balance sheet on AI. They're going to be issuing debt in order to, going to be raising debt, raising money in order to fund their AI initiatives, which means that in the short term, they might become less profitable. Is that when they report their quarterly earnings, that their profitability, their net income is going to go down because they're going to be spending a lot more money on CapEx, that they are going to be reinvesting a lot of money back into the business, even money that they don't currently have. They're going to be finding that money and reinvesting that back into these data centers, these chips, all of the technology that powers AI. And investors don't really like that. They don't want to see earnings per share or net income decreasing quarter after quarter. Investors want to see increases. They want to see revenue increasing and they want to see net income increasing. And this has really been a shift. AI has really shifted the entire investing landscape because previously, historically, businesses have really they've done two different things primarily. They've purchased buyback stock, they've paid dividends, or they've reinvested in the business. Now, prior to AI, a lot of the tech companies didn't see a massive investment on the horizon. So instead, they were buying back a lot of stock. And for instance, Apple still has a plan to buy back a lot of shares outstanding and pay dividends. So a lot of these companies decided that they would pay dividends and that they would buy back stock, but that has all changed. Now all of these companies are investing heavily into AI, into capex, reinvesting back into the business, less interested in buying back shares or paying dividends, more interested in AI. And that is happening across the industry, the entire US and world economy. All of these companies, they are looking at how they can invest into AI and how AI can drive revenue for their businesses. But they're going to have to integrate all of that into their business. That's where businesses like Palantir come into the mix. And that is really, let's talk about Palantir because that is really what has driven some of the frothiness in the market. What has taken the market a little bit down is that Michael Burry, the legendary investor from The Big Short, who has actually been pretty controversial with some of his trades, or just different with how he is traded. Of course, he was laser focused on the mortgage crisis of 2008 and made a lot of money. But since that time, he's made some interesting trades and he's always kind of focused on the short position. So, betting that certain companies will go down. He bet that the entire mortgage industry would go down in value. And that is what he is doing again. Came out in the news that he was shorting Palantir, and that really sent the market questioning whether or not this AI is a bubble or whether or not this AI is really going to be as impactful as they claim, or if the run up in value in these companies is worth it for investors. And the reasoning behind his thesis was that these chips aren't going to last as long as these companies like Google are saying that they are going to last in their accounting, and that eventually the Pied Piper will come. That eventually this will show up in their balance sheet that they're going to take a hit to their net income, and that their profitability is going to go down because they are not accounting the right way for these specific chips, and or that they're going to have to buy more. But I think that that's a very niche point of view, and that there are a lot of people that go that are betting the other direction from him. And he could be right. He could be right on uh, the direction of AI, and that right now we are in a bubble, that all of these companies are overvalued. But he also could be wrong, and that would actually be a big opportunity for Palantir and some of these other AI companies that he may have put a short on. So, what happens when you short a stock is that if the stock moves against you, if you are short a big position on a stock and it moves the other direction, it starts going up in value rather than going down in value, it's a big problem. And in order to cover your losses, you have to buy more stock. You have to keep buying as the stock gets more expensive. So having a huge short position, he could be hedging it. I'm sure he probably is, but it's a very niche point of view, and I don't think people should be worried about what his point of view is. He also came out and said that he's going to take his fund and make it a family office, take it private basically, which I think that is another thing, is that he doesn't necessarily, I think the reason that he did that is probably doesn't want all of his business splashed out there on the front page of a newspaper when you actually have to report. If you're public, if you're a fund, you have to report your activities when you make big moves. And he probably doesn't want to be on the front page of the news, same as maybe some other investors like Soros, or maybe some of the congressmen. They have to report their trades, but they probably don't want those trades reported, just simply because of the scrutiny that you're going to get from the moves that you make, and when you make a huge short position, it comes out in the news, that definitely moves the stock. Maybe you don't want it at this moment in time. Maybe you're playing the long game like Warren Buffett, which also he came out, he's stepping down, which maybe has driven the part of the stock market down, is that he's not going to be driving it. But uh, the market is definitely tanking. It's going to be frothy from here on out. That is the primary takeaway, is that from now on, the market is going to, there are going to be big swings up and down in the market. But there are some good news on the horizon. And one of them is Buffett himself. Yes, he is stepping down. He's stepping uh, back from the driver's seat of Berkshire Hathaway, which props to him. He's 95 years old. He has earned it. And he has great people that are going to take over. So the most interesting thing was that Berkshire Hathaway invested into Google, which I found very interesting. Even though Buffett is still at the helm, I have a feeling that this was one of the lieutenants, that Greg Abel, that bought into the Google stock. We don't know for certain, but now Berkshire Hathaway owns three of the major AI stocks. He owns a small position in Amazon, he owns a big position in Apple, and now he owns a starter position, which is worth $4 billion in Google. So we'll see how that shakes out. I think these might be long-term holdings. I could see these staying in Buffett's portfolio for a long time. And Google has definitely been uh, one of the biggest uh, people benefiting, organizations benefiting from AI. It's the best integrated, I feel like, into their product. I don't think Google search is going away. I don't think YouTube is going away. I think AI will just make Google search and Google Gemini, their AI product, more valuable to consumers and more valuable to organizations. This will help their cloud business expand and get better. So, what should we do as investors? Should we be selling all of our stock? Should we be buying stock? Should we be holding? Right now, I am buying. I'm a huge buyer. This is a huge opportunity for investors. Every day that I see the market go down, I am buying a little bit more. Now, the question is, do you have the cash needed to make these purchases? I would say right now, there's going to be lots of opportunities in the future, in the next 1 year to 1 to 5 years. I would say there's going to be a lot of ups and downs in the market. So I'm laser focused on having enough cash in my bank account and in my accounts in order to make these purchases when these big dips, when these big swings happening. So I would say that right now you should be buying ETFs, buying the overall market when it goes down, when it's going down in value. So an ETF like VU or VGT, those are both Vanguard, that are very large economy-wide funds, essentially. So I would be buying those types of assets. And then I would be buying those growth companies. I would be buying into Google or Amazon or Microsoft, those companies that are going to benefit from AI, because whether or not we like it, AI is here, and it's already here. It's becoming more ingrained in society, and these companies are going to invest more and more money into AI, whether investors like it or not, because they don't want to be left behind. They can't afford to be left behind. And so I am definitely investing into these companies simply because I think that there is still lots of room to grow. A company like Google, there's so many opportunities for Google to grow, from Waymo to YouTube and even the search. Now that the lawsuit of the government lawsuit is behind them, they're going full steam ahead. I also like some of the other smaller cap growth names. Those are getting hit even harder. I was very successful investing into Palantir. I invested into Palantir a long time ago, and now that it's pulling back, I think this is a good time to probably invest more into Palantir, Sprouts Farmers Market, Robinhood, SoFi, all of these younger growth names. I would be investing more money into every single time there is a dip, because uh, over time, especially the younger SoFi and Robinhood, I think these companies are going to be massive. They are just at the beginning. They are just at the beginning of their run. and they are going to be growing bigger and bigger. 10 years from now, I highly expect that these smaller growth names are going to be much larger, but you also have to be careful. So, like I said, have a cash on the side. I'm also adding to my safety portfolio. So, those are things like bonds, those are the blue chip stocks that are classic, like Costco and MasterCard. Uh, and HYG is a corporate bond fund that I'm really a fan of. So, uh, I'm always investing into my safety portfolio for the long run. So that money I feel like will just stay there and grow and be that steadfast barrier, that steadfast lower point to make sure that I'm always saving enough money and I'm hedging against any downturn in the market. So don't be afraid. Don't be scared of this market. It is a great opportunity for younger investors, for people to take advantage of the future that is coming, because AI is not going away. It is the future, and these markets will be frothy from here on out. So thank you for watching this video. Don't forget to like and subscribe, and remember to make good money choices. Till next time.